We are live.
Okay.
Hi everyone, I'm gonna take like 2-3 minutes for everyone to join. For people that are already here, hi, just grab a cup of coffee, cup of tea. We'll start in 2-3 minutes.
I think we should kick this off, guys. Yeah.
Sure.
Yeah. Cool. So I want to welcome everyone who's joining today's webinar. Just some housekeeping rules before we begin. We're gonna have a brief introduction from the main speakers. They will both answer a couple of questions that we have prepared for them. And if you have any questions during the webinar, you can pop them in the chat, or you can wait until the end where we'll have a brief Q&A session for them. So to begin with, let's have Andrew from Akurateco tell us a little bit about himself, and then Joao, the floor is yours.
Okay. Hello, everyone. So my name is Andriy Repchuk. I'm founder and CTO of Akurateco. Akurateco actually is a payment orchestration platform which specializing mostly on the financial companies, payment service providers, bank, and fintech startups, which makes us, different from others on the market. Today I believe I would like to share my experience and thoughts in regards of PSP businesses, and also in relation to PSP businesses to anti-fraud. So like that.
Thank you, Andrew. Joao?
Yeah, thank you, Andrew and Antonis. So I'm João. I'm Portuguese. I have a technical background in computer engineering and AI. So I've been working with AI for about 20 years now. So between studying AI and actually applying it in several industries, did a PhD a while back, and I've worked in cybersecurity, in telecoms, and payments, of course, before starting. While we were experiencing pain, working or trying to prevent fraud in fire in the Netherlands. So we come from within the industry. Well, and that's probably a major difference that Fraudio has when compared to other players in this industry that focus more on the we really come from the industry, and so we're very close to PSPs, acquirers, also on the issuing side.
Cool. Thank you guys for the intro, and we're gonna jump right into this with the first question. To kick things off, I'll start with Andrew. Andrew, could you share with us what drives companies in today's market to launch their own PSPs?
Okay. So I would like to start first in regards of the potential types of companies, of individuals who could have initiative to launch own PSPs, because they are, let's say, different of those companies, different reasons they have, and even by the PSPs, that means different things, because PSPs or payment gateways, let's say, could be quite different. So, for instance, the companies which already have kind of clientele, a client base, and working with them, it could be like platforms or banks. They can recognize the potential additional stream in regards of payments. So even acquiring bank, let's say, which working normally with the payments with other payment service providers or with some intermediaries, at some certain moment would like to start own PSP business. And having this PSP business, of course, it can bring him a lot of additional revenue and also a lot of additional services for their clients, to have one-stop shop instead of, let's say, working with a bank and working with a PSP, which is a middleman, actually. The platform has almost the same situation. So the platform already provides some services to their clients, and could be services, could be products, could be marketplace.
I think we lost Ruby.
Yeah, Andrew. I'm sorry, Andrew. There's some issue with the sound. You disappeared for like 30 seconds.
Andrew, I think your audio must be disconnected.
Yeah, I think the Bluetooth must have disconnected, but it's not hearing us still.
No. Vlad, could you message him maybe?
Yeah, sure.
Yeah.
Let's figure it out. Yeah, it's probably the AirPods got disconnected as always.
Probably.
And now it's muted in the platform itself. 1 second, Andrew. We heard you, then you suddenly disappeared.
Maybe we can see João's part of the question until we have Andrew back.
It is not allowed to turn on the mic. Andrew writes in the chat. Yeah, sorry for the technical difficulties. We'll figure it out.
Cool. Maybe I'll start with a question for João until we figure this out, so we don't have people waiting. João, considering the foundational fraud prevention measures mentioned, why is it crucial for newly launched PSPs to consider third-party fraud prevention services from the start?
Yeah, good. It's a good question, and it's always a strategic decision to make when to start those efforts, right? So you can start right from the beginning. You can even plan on building your own and having some form of fraud prevention system built in house for a little bit of time with maybe some rules. But I'd say that it's important to understand that. First of all, fraud is unfortunately extremely complex. So to be able to access specialized fraud prevention expertise, I think it's quite relevant, especially when starting a new line of business or business altogether, and one that is able then to be scalable and to adapt with the different fraud prevention measures that are possible, adapt to the life cycle of the business itself, I would say, and this, of course, while allowing for this new PSP or new channel to focus on their core business activities. Okay. Also, as we know in the payments world, especially on the acquiring side, there are, I would say, two types of concerns. So merchants have concerns with their own liability, with the actual chargebacks and fraud that they see being perpetrated in their platforms. But then acquirers, payment facilitators, PSPs, so anyone who and the definition varies, of course, from almost country to country or even person to person. But when there is some form of liability from for what we call merchant-initiated fraud by this PSP or acquirer. So ultimately, when there's a fraud happening, and then the fraudster actually opens a merchant and processes payments in their own account, and then runs away and all that fraud, then the liability for all that fraud actually then shifts to whoever did the underwriting, whoever let them into the card network, to so to say, and having someone actually protect businesses, and in this case payments businesses, against that type of fraud, I think is also important. And then there's the compliance aspect. So money laundering is and complying with anti-money laundering regulations is becoming a very important topic and extremely front of mind for a lot of people, and again, having to deal with developing a strategy for all of this without it being a company's core business can be a very heavy burden.
Yeah.
Perfect. Thank you for that, Joao. And since you began, I think I'm gonna go on with the second question as well. Building on that foundation, how can PSPs expand their fraud prevention strategies post-launch to address evolving threats?
Yeah, it's so I started touching upon that, and then of course I didn't go into it, but I would say it's really, again, it has to do with the stage of the business. At the very beginning, you need some form of light onboarding checks that prevent malicious actors from entering your platform. You need some form of fraud prevention to protect the good merchants that you are able to acquire. But but you actually don't want to put too much friction in the system, because otherwise you'll never really grow, and you're focusing on the wrong aspect.
So it's better to keep it manual, right? For the first time.
Exactly. It's I think it makes sense to keep it quite light and to go with the until the volumes start picking up. It's good to remain quite with a light approach, and maybe even just go with some pre-built models, with the set of rules that have been tried and tested in the past by a number of other companies in the same space and in the same region, operating in the same segment. So low or high risk acquiring, and basically picking up from there. So establish and align the strategy of the PSP, the acquirer, with an anti-fraud strategy and regulatory concerns tackling strategy, and then develop as time goes. And there are several routes in which a business can develop their anti-fraud strategy. So you can really stay light and put on the transactional fraud side, and put more emphasis, for instance, on the onboarding processes, and this will prevent most likely money laundering issues, even though the duty of reporting will still be there. But it will prevent merchant initiated frauds, and then you can just choose to have a very light approach when it comes to transactional fraud detection, and just offload the responsibility mostly to your merchants. And it works in most cases in low risk segments. Point of sales is a channel that, for instance, doesn't have a lot of fraud. So if you're building a PSP that's going to work mostly with small companies in that space, your merchants won't see a lot of fraud, but then you'll start seeing fraud coming from merchants, right? So then it can develop quickly, and it can go from something that looks very vanilla and very, very simple and very almost safe, but it can develop very quickly into a major problem when it comes to it does some little effects, the camera, but it can develop into something that puts your business at risk and puts pressure on your business. And then then you can start tightening the screws with deeper models, with models that are a little bit more aggressive, maybe, and really, again, if you see where I'm getting to, when you start tightening the screws, so to say, quickly you run into operational issues, right? So you need a team to do it. If you're running a rules-based engine, it becomes quite complex quite quickly. And so again, I truly believe that partnering up with experts and with people that ultimately are on your side and trying to help your business and actually have experience being on the same side, as you in fighting fraud, I think is a winning strategy.
Yeah, absolutely. Thank you, João. Andrew, coming back to you, I'll repeat the question because you were cut halfway through. You're basically sharing what drives companies to launch their own PSPs in today's market. So yeah.
Yeah, thank you, Antonis. Hopefully this time my mic will let me to continue. So, coming back to the question, so I already mentioned the platforms and the banks and any other financial institution could potentially are interested in the launching their PSP because they already recognize or are recognizing additional revenue streams for them and for providing additional services for their customers. Also, it could be merchants or large enterprises, or not even large, but working internationally. If let's say they're working internationally, they have to work with multiple payment methods. They have to work with multiple acquirers or multiple payment providers or any other financial partners, which actually means that they have, you know, different dashboards, different back offices, different accounting systems for each of that, and many other, let's say, headaches and lack of control of it. And if the merchant or this enterprise is substantial enough, in some certain moment, it makes absolutely sense to finally get into control of all those payments, to create, let's say, either internal PSP, internal payment gateway, which let's say required by the needs of this merchant or the enterprise, or to even start, let's say, separate business as a PSP, but first, of course, with the whole idea to cover all needs, and to, let's say, instead of working with multiple payment partners, to work only with their own PSP, and nevertheless, how many let's say banks or any other payment methods would be connected to that PSP. So it makes perfect sense for them as well. Also, you know, there are a number of not even small companies or individuals which are acting as ISOs, MSPs. So basically, they are agents who just bring clients to acquirers or to any other, let's say, processors, and earn some referral fee on it. And on some, let's say, level of growth, of course, for them also would be interesting, first of all, finally to get statistic in one place, because in some cases, nevertheless, they're referring merchants to banks. They even can get access to the dashboard and see how many transactions they are processing through the bank. So in some cases, just a matter of trust of them to their partner, because partner is saying, well, we don't have such opportunity. We are not giving you access, and we cannot give you access to the merchant portal because it's merchant's data, and so on. So for them, after a certain, let's say, level of growth, as I said, makes sense also to run own PSP, run own payment gateway. It could be, let's say, depends on how juicy they are. It could be the FAQ, or it could be the agent model, so-called distributive PSP and collective PSP. So, but nevertheless, let's say to start that, they would need some technical background, some technical platform. So once again, the main reasons which are driving potential individuals or enterprises to launch own PSPs are getting access to additional revenue streams, getting control of the payment data, control and security and efficiency. It's all over. Yeah, and what else? And also to fight the potential fraud and to find any issues related to security, to enhance security more in the current business, because the payments, it's a very important part of any business. So nevertheless, how good is your product? If you don't have a structured and optimized payment flow, it will not bring you revenue, and revenue is the most important thing. And so like that.
Yeah, thank you, Andrew. And now that we know the intention and the motivation behind it, maybe let's move on to more of the operational part. Can you guide us through the checklist of essentials needed for the MVP of a PSP, particularly focusing on securing the launch?
Yeah. So as I said earlier, the PSPs could vary, and it could be different companies which are at the same time called PSPs, but they are doing quite different business. Yeah, so targeting different verticals. They are working either on collective model or distributive model, and depends on that, the list of requirements would vary as well. But in general, if you say, let's say, and if you mean by the PSP,
like the collective PSP, which is probably the most desired one to launch for especially for standalone businesses, which is dedicated to some specific geo or some specific vertical. I would distinguish these requirements on 4 parts. So it's legal and compliance requirements, software and technical requirements, some operational things which have to be complete, and security measures. So the legal and compliance are, it's depends, as I said, on geos and verticals you're working with. You would need to have a license. And if you working on multiple geos and multiple verticals, it could even be required to have multiple licenses and a lot of time and a lot of resources. Beside that, obviously, let's say if you want to process it through your own platform, installed on your own servers with your own infrastructure, you have to have the PCI DSS certification, which depends on your world and depends on number of transactions, depends where you locate it. Is it bare metal? Is it cloud provider? Is it cloud provider PCI certified? And this bare metal is located in the hosting which is PCI certified. Also could be, quite, cost effective, quite costly, and and time consuming. The third thing, it's last but not least in regards of legal and compliance requirements, is GDPR and any other data privacy laws. Since you're working with personal data, you have to be aligned and compliant with all regulations in those geos where you work. Europe by far has one of the most strict policy in these regards, and nevertheless, of not so many cases of let's say of potential, let's say, damage you can get if you are not compliant with GDPR. You should not underestimate these measures, and the GDPR is really the thing you have and requirements you have to make. Second, the software and technical infrastructure. I mean, to be a PSP, nevertheless, are you collective or distributive, you have to, let's say, run it on some payment gateway. So you have to either build it in-house, either buy it as a code, or rent it from companies like ours, for instance. And depends on your requirements, depends on the geos, verticals, payment integrations you want to use, some additional functionality, and so on. Very important thing about the fraud detection and prevention tools. And I totally agree with Joao that it should be done step by step. So it doesn't make sense to start with very sophisticated system of fraud prevention if you don't have enough volume, because at the end of the day, it doesn't make sense at all. Second, I wouldn't say that quite often when the people are starting PSPs, which are like super vertical agnostic, and the same time the PSP could work with e-commerce web shops, with gaming, with ticketing system, with travels, and so on. So there are some examples, like for instance, ADN or Stripe, but it's a different story. And they, let's say, nevertheless, they have quite strong focus, because if, let's say, even take those two examples like ADN and Stripe, by far the biggest PSPs on the market, if you, let's say, take a look more precisely on them, they're quite different companies with a quite different clientele, which almost not overlapped. So in regards to fraud detection, you, let's say, must have some simple checks, like email checks, IP checks, number of, let's say, types, or number of times when the people are trying to pay. And it could be quite long list, but at the end of the day, to implement it is quite simple. And this, I would say, at least at the start, would help you to eliminate like 80-85% of the potential fraud cases. Of course, it's all potential fraud cases, could vary, depends on this merchant-initiated fraud or custom-initiated fraud, and so on. But once you have your volume rising, it absolutely makes sense to go to professionals and to start, let's say, working and searching for companies like Fraudio, for instance, which is specializing on some particular cases, have significant data sets and experience working with them, because it could be quite a trap for you, let's say, if you put a lot of efforts and increase your volume, increase your sales, and some, smart guys are trying to do something with you, and you would not be able to respond anyhow. So it's better to. Can you hear me? Yeah. Okay. Because
Yeah.
So it's better. I'm checking, but it's better. Yeah. So it's always to think about this in advance, and scalable architecture also could be very, very important for that. Because we let's say it takes probably more time than I have, but in regards of operational things, you have to build robust merchant onboarding processes, which also somehow related to the anti-fraud and prevention tools. But let's say your merchant onboarding should be fast, but structured and preferably automatized. You have to come to the market with a clear pricing structure, because it's hard to overestimate that. But some people on the market, especially which are working years, have such a complicated pricing structure and such a big number of pricing fees that sometimes it could be like a deal breaker for their potential customers. And the last part, it's security measures. So, once you're working on your, let's say, own payment gateway, on your own infrastructure, let's say you have not to forget about the end-to-end encryptions in all receiving, transmitting the data. The regular security audits, if it's related to PCI certification, could be quarterly scans. Annual recertification, but let's say if you're working with a more, let's say, potentially dangerous types of businesses, which are where the fraud and the perpetrators are common, so you can also work with external audit companies which are doing the penetration test and the audits from the inside and outside of your system. And disaster and recovery plan would be the final bullet for security measures. So I think that's it.
Perfect. Thank you, Andrew. Before we open this for some questions, I'd like maybe, because you both have a lot of experience in the field, if you have any real life scenarios, like from working with the companies that you have and the people, do you have any specific fraud cases that come to mind that you might have encountered, specific strategies for fraud mitigation, something that maybe you could share that is an actual case study? Justin, maybe Joao, you have something to share?
Yeah, I cannot really go into too much detail, but I can give detail maybe of 2 or 3 different cases. So one very interesting, very obvious case, I would say almost, is and it's not a case, it's actually a prominent fraud pattern that we see, and so we've detected this a number of different cases around this pattern. But it's actually in point of sales, so terminals that are taken offline artificially, with the intention of processing cards that were stolen, or even in some cases when there's basically the balance cannot be checked, even to get transactions approved. With accounts that would have no funds available. Obviously, this is a case where the merchant or an employee of that merchant is colluding with the fraudsters. So it is a form of merchant-initiated fraud, but it is extremely prevalent, for instance, with taxi drivers, but even with supermarkets. So even in certain supermarkets, older point of sale terminals that can be taken offline rather easily, and literally, we detect certain terminals in certain stores where the ratio of online to offline transactions is different from what it should be, and then we look at the transactions and they are just obviously there's something wrong, and so then we can actually report on the terminal and not just the transactions themselves. Yeah, so we can report on very specific information that then leads to investigations. So this is one. It's quite prominent. We see this in a lot of countries. Then we saw a major one years ago, and this was an anti-money laundering or a money laundering issue that actually led to a huge fine being awarded to a large bank. I really cannot say too much about this, so I cannot even say the country. But we're talking about a fine that at the beginning was 800 million, and then it actually went above the billion mark. And this was a payment terminal that was associated with the merchant in a specific vertical that's not high volume. Typically, you don't see high volume activities, and it was a point of sales, so brick and mortar retailer, and we saw. But this was historic, so this was actually a test that we did to see if we could detect this, and this was blatant. It was basically obvious that there was something wrong there. But basically the merchant had taken the terminal to some place in Latin America. They had set up VPNs to connect to their home country, and then they were processing cards that had been basically filled up with money, that came from
sketchy things
from numerous illegal activities, drugs, etc. And the volumes were massive. So we're talking millions of euros being processed, and then even the stupidity of this was that the most of this volume was being processed overnight because of the time zone differences. So it was really blatant. But this is the type of stuff that happens if you in this case it's a huge bank, and it's a very well known case actually. So if you look it up, you'll find information.
So in those situations, you don't even notify the merchants or the network. You go straight up to the police, right?
That's no. So no, we don't report to the police. We report to our client, and they have the duty to report and to investigate and to report to the regulator and potentially to the authorities. Yes. Right. So this is more on the money laundering side, and then there was also a very interesting one on the issuing side. So there was this was a cross-continent case that we spotted. So cards being issued in Indonesia, so a very specific BIN. That those cards were then taken to Latin America. Again, it's quite prevalent, and then they were being used in merchants that were set up basically almost only to process those cards. Those cards were legally acquired, so to say, with fake identities, and they had, a specific limits within a range. But there were a lot. There were really a lot. So it was almost an entire bin that was allocated in one sitting. So we're talking about hundreds or thousands of cards being used in a cluster of merchants, and basically to do bust out fraud. So this was not, I would actually not consider it fraud, because it wasn't card abuse. The cards were being used by the I wouldn't say the legitimate card holders, but the card holders they were issued to. But basically there was a major issue with onboarding, and with involving fake identities at the issuing side. Yeah, and then the acquirer faced a lot of consequences because they had onboarded the merchants, but the issuer had actually issued the cards, and then it was proven that it was a network that was involved both on acquiring the cards, getting the cards, and on the merchant side. And so there was one card issuer that actually shut down their business because of this. So this was quite brutal. And again, this is something. It's a case that we know very well. We have all the data for it, because that's also an interesting aspect of working with a company like Fraudio. So we acquire data from a lot of different parties. So we have trained our engines with real cases, very complex cases like these ones, and then with the normal day-to-day cases, fraud cases, and we have billions of transactions and millions of fraud and money laundering cases in our data set. So basically, when by us being integrated with Akurateco, Akurateco's clients can actually tap into this platform, this system that has been trained with all of this data, and especially for small PSPs, when starting a new business without almost any data, it's impossible to match the level of performance. It's just it's just not how machine learning and AI systems work. You need data to make them to train them. So yeah, I hope this tickles the curiosity. And there's a lot of information about the cases that I shared. So if you guys look around, you'll find information.
Yeah. Thank you, Joao. It's always interesting to hear something firsthand and not just be like an imaginary case. And my comment is that these become blatant and obvious once they get caught. Like when it was happening, like once you catch them, then you're like, oh, they were tempting to do this. It's too obvious.
If you know where to look, they are obvious from the beginning. So if you know where to look, so if you're looking for those patterns, they are really easy to find. And so you're able to find these problems after just a few transactions happening, or even while it is happening, and often then be able to detect block transactions, block merchants, block entities before settlement. So even reduce the exposure down to zero, literally. So because obviously you need a few transactions to go through to detect these more complex cases. Otherwise, you simply cannot tell by one transaction, typically. But then if they happen quickly and you block and you see them happening within a window of settlement, and maybe I shouldn't be saying this, but if you do it within a certain window of pre-settlement, it's very simple to just block or delay the settlement while you do an investigation, and then release funds if the investigation is turns out to be negative. But if in really a lot of cases we're able to save 100% of what would be a significant fraud, loss to fraud.
Yeah, I agree. Guys, returning to the earlier part of the webinar, I had a small question to Andrew related to what Joao was saying. So basically, Joao explained that for the starting PSPs, there would be enough, like having a manual set of rules within the system to combat the very obvious fraud. If I'm not mistaken, correct me if I'm wrong, Andrew, there is an engine within Akurateco to do this shit. To do this, I'm sorry. To do this, and then you can obviously, like, whenever the transaction amount passes a certain threshold, or the number of transactions for some one separate merchant you exceeded the amount, we can actually cut them. And
yeah, sure. I wouldn't say it's so easy. So because the number of rules we have in the system already pre-created, and which we have significant experience, more than 140. So from the very obvious ones, like number of tries, or number of tries by email, or matching IP with a bean, or it could be much more sophisticated. So you can make a combination of those, and you can, let's say, do so if he tried 3 times with the same email, then go to the, let's say, pattern number 2, and if the pattern number 2 match, then go to blacklist. And if, let's say, like I put it whitelist, so we avoid all checks and so on. So it's a kind of like engine which could help you, as I said, to eliminate not only the simple fraud, but all potential fraud in 85% of cases. What I would like to add more, that we have such, let's say, opportunity in our system to identify fraud and to identify potential, let's say, fraud patterns. And just as an example of that, let's say that we have a merchant initiated fraud which lays on the level which merchant, for instance, selling some shoes. Yeah, and it has some specific tickets, some specific, let's say, peaks of sales, some specific intensity of sales, and so on. But on for some specific reason, and at some certain time, the merchant by himself, or let's say it's his affiliates and so on, mixing this traffic with something different, which is not shoes. It's not shoes at all. And but it has the same ticket size. It has almost the same volume and the same intensity. But nevertheless, it has the same ticket size. If you have enough data set and you understand the behavior of the customer which is buying shoes, you can build a model. And by that model, you can see the difference into behavior of customers and see those peaks of strange behavior. And I'm thinking about the pretty exact case. So having this ability in our system helped us to identify some specific merchant that there are like quite unique situations when after 3 or 4 months of working during the weekends, it was slightly slight growth of sales, so slight growth of volumes. But if take more precisely on that, the behavior of those sales and intensity of those sales, and in general, let's say, the other parameters which could not be identified if you just take a look, and if you look on this manually, but with the model, helped us to recognize those peaks. And after coming back to the merchant with questions and not getting any clear answer, of course we blocked the merchants, and at the end of the day it was something different. I would not tell you like what exactly, but it was not shoes at all. And of course it was potential let's say risk for the acquiring bank and let's say for anyone who, let's say, involved in that process. So it was obviously merchant initiated fraud which would not be possible to identify if you don't have such a manual checks. So the other also simple example could be that there is e-com merchant working internationally, and the merchant has affiliates, different affiliates sending traffic to it. It's very important to measure the, let's say, performance and the like things like the acceptance rate, fraud rate, chargeback rate, retries rate, and so on for each particular channel. So, because in general, it could be the average level of chargebacks, which are not, let's say, going on, over radar and so on. But for some particular affiliates, if you are tracking this information, if you're able, let's say, to track this information by those channels, which are divided by the, affiliate IDs and so on, it's very important, let's say, to have it, because then you can see immediately that if those parameters vary from one affiliate to another significantly, probably makes sense to increase anti-fraud measures for this particular channel and not do what you are, let's say, letting do to other affiliates. And this, from one hand, let's say, will not bring you surprises like rapidly your chargeback ratio will increase, like from 0.5% to 1.5%, 2%. It will, let's say, bring you to closing of your terminal, and at the same time will not decrease your acceptance rate if you will put all those measures of anti-fraud to all traffic and all potential channels. So like that.
Cool. I think question answered. And I think it's time to open the floor to the people if they want to ask any question. I think they can pop it into the chat, and then
Yeah, we can.
well,
I'm sorry, Anthony. So we can wait for like 1-2 minutes for people, for viewers. If you have any questions, we have like a short Q&A session. We're here to answer them. In any other case, let's just wait 2 minutes to wrap up. We can answer those questions on the email. Feel free to contact us later. The recording of the webinar would still be available when we're done. The webinar would be still there on demand. If you want to share it with anyone else, feel free to use the same link. Just regular stuff.
cool. I don't see any questions in the chat. I'm gonna just wrap this up. Like Vlad said, the recording will be available on demand. Feel free to email us if you have any questions regarding what was said. I want to thank everyone. Andrew, Joao, thank you so much for the input and insights. It was great to hear it from the horse's mouth. And yeah, thanks again, and wish everyone a great afternoon.
Yeah, same.
Thank you.
Thank
Thank
you,
you,
guys.
everyone. Thank you very much.
Thank you.
Yep.
Bye.
Bye-bye.
Bye.
Bye-bye.